Ladies and gentlemen, please welcome to the Rebel Capitalist Live stage, Mr. Mark Moss.
So how many people believe that fiat money, the fiat money system, is responsible for most of the problems that we're seeing in the world today? Anybody agree with that? Yeah. And if the fiat money system is the problem for most of the problems that we have today, then the solution would be to not have a fiat money system, right? Which would be like a sound money system. Gold's been sound money for 5,000 years. It's worked out pretty good. A pivotal moment in my time was 2008. If you watch my channel, you know I'm a macro investor. I started buying real estate at 18 years old. Bank-owned repos, right out of the bottom of a crash, buying bank-owned repos, fixing them up, flipping them. I then went on to develop over $30 million in real estate from the dirt up. Multiple businesses, Fortune 500 exits. I've done a lot of different things, but it was this event right here that was pivotal for me because I built up a lot of wealth and then I got all wiped out. And that's when I had to learn, wait a minute, like I know how to make money, but what's this financial system? Why is it broken? And since then, I turned into a gold bug, like Lynette. Now I would say I am a sound money advocate. And there's different ways we can have sound money, and so we're going to talk about some of those things today. Now, let me see a show of hands. How many people own crypto? Any cryptocurrencies at all? All right, most people, way more than half, almost everybody. How many people own only Bitcoin, no other cryptos? 2 or 3. How many people know the difference between only Bitcoin or crypto? A couple people. All right. Now, I've been talking about Bitcoin since 2016. About 2015 when I started buying it, I figured I got to go tell the whole world we finally have a tool we can win with. I started writing a cryptocurrency research newsletter 2016. 2016 to 2019, I personally researched, published over 1,000 pages of research on cryptocurrencies. So I've been talking about it a lot. Now, over those times, I've had to answer this question about 1 million times. Oh, how's that Bitcoin doing, huh? We're at Thanksgiving dinner, all the family's in. I told everyone to buy Bitcoin before. Oh, Mark, how's that Bitcoin doing now, huh? Going good, right? I've answered this question hundreds of times, of course, because look at the chart. Look how many times Bitcoin has fallen more than 50% since 2016. That's a lot. You know how many times I've had people pissed off at me? You told me to buy this thing, it's down 50%. That was at $5,000. Would you be mad at me if I told you to buy Bitcoin at 5,000 and you did? No, right? That would be awesome. Anybody be stoked if you bought Bitcoin at 5,000? Yeah, of course. But then it fell 50%. People never talk to me again. My family's mad at me. So I've answered this question, how is Bitcoin doing? A lot. And lately, I've been answering it a lot. I get a lot of comments on social media. I probably get 5,000 comments a week. And this is the #1 question I've been asked for the last month. I'm getting trolled on all my comments, all my YouTube videos. Oh, how's that Bitcoin working out for you? So there was a lot of topics I could talk about today, one of which I have this big macro picture that I'm viewing the world through that I think shapes the way that I see the world and tells me why the Fed's not going to pivot. Some big views, but I think this was the most pressing one. So we're going to talk about this one today. How's Bitcoin doing? Well, if you want to know how Bitcoin doing, it sucks. It's down 68% right now. That's how it's doing, 68%. Okay. It's also up 28% in the last 7 days. What time frame do you want to look at? It's also up 200 million% in 12 years. What time frame? 28% in 7 days, down 69% since the last time high, up 200 million in 12 years. What time period do you want to look at? It is the fastest asset to $1 trillion in history, faster than Microsoft, Apple, Amazon, Google, etc. So how is it doing? Well, it's up 425% in the last 24 months. What time frame do you want to look at? I was talking to some of you guys last night outside. We were talking about a bunch of different things, macro picture things. And I said, the one thing you always have to keep in mind as you listen to lots of speakers up here today is always what time frame. Bonds are horrible. No, bonds are great. Well, over what time frame? Bonds might be really good in the short term and really bad in the long term. So you're going to hear different things, but you need to clarify over what time frame. Over what time frame? Well, it's up 425% in 24 months. Let's take a look at the FANG stocks. You know the FANGs, Facebook, Apple, Netflix, Google, right? The big ones. Well, Facebook, in the same period of time, is up 15%. So Bitcoin's up 425%. Facebook's up 15%. It looks like an altcoin. Look at that crash on Facebook. So anyway, it's down more than Bitcoin, and it's up 15% since then. We can see that the Apple, is up 160, pretty good. Not 425, but pretty good. We can see Netflix, horrible, down 37% from the March 2020 low, before $8 trillion got dumped in to help prop it up. So Bitcoin's up 425%, Netflix down 37. We can see Google's up 122, pretty good. Not considering that the entire market got inflated by 40%, but 122, pretty good. Not Bitcoin, not 425. So what time frame do we want to look at it? We can see that all the markets are down. It's no surprise. All the name brand tech stocks, Shopify, Peloton, PayPal, you name it. They're down 70, 80%, much worse. So what time frame? Now, a lot of people look at Bitcoin and go, but why is it so correlated to the market? It's supposed to be a hedge. It's supposed to be a store of value. Why is it trading like the NASDAQ? Well, it is and it isn't. One thing that there's a problem, a big problem in the world today, is that everyone has lost nuance. There's a lot of nuance. So does Bitcoin trade along with the NASDAQ? It certainly does. 90% of the time. 90% of the time it does. What about the other 10% of the time? So we can see 90% positive correlation since January 1st of 2017. And when you have an asset like Bitcoin that has very low liquidity, and then we get a bunch of degenerate gamblers in there that do massive over leverage, what happens? Massive over leverage, very low liquidity, what happens? It's very volatile because all that low liquidity with the leverage is leading to massive spikes and massive crashes. And we just saw the biggest wipeout, the highest intensity market-wide liquidation event in history over the last couple weeks. Lynette talked about Terra Luna token. We saw $60 billion of wealth evaporate out of the crypto space. $60 billion. Let's put that into perspective for a second. You guys remember 2008 Lehman Brothers? Everybody remember Lehman Brothers going down? It dragged the entire global financial system down. Lehman Brothers was $60 billion. 60 billion in the global financial system was small. We saw 60 billion in a $1.5 trillion market cap. And they had bought billions of dollars worth of Bitcoin and overnight had to dump it all. And we've seen it now, it's stockpiling, now with Celsius, now Three Arrows Capital, and all this leverage is getting dumped into the system. But back to the correlation. 90% of the time. What about the other 10% of the time? Well, the 10% of the time is where we make up all the difference. You can see on the chart I have up on the screen, in 2013, we saw that Bitcoin went up by 1,100% in that 10% of the time it wasn't correlated. And then it was correlated again, and then in 2013, it went up by 580% when it wasn't correlated. And then in 2017, it went up by 330% when it wasn't correlated. You get the idea. And what we can see is that the correlation is waning. It's dropping. We can see 2013, it was 0.91. Today, it's 0.8. That is a big drop in correlation. A lot of times people expect too much too soon. Back to the timing. Over what time frame? You're expecting something to happen magically, instantly today? Anybody know how long it took for the dollar to take over the reserve currency from the pound sterling? Anybody know? About 40 years. 40 years didn't happen overnight. 40-year process. All right. Now, when we're looking at new technology, the worst thing you can do is look at the price. We're talking about a brand new revolutionary technology. The most boring thing about a new technology is the US dollar manipulated value. When you look at new technology, if you're a venture investor like I've been for decades, if you're invested into venture-type companies like Uber, for example, that are going to disrupt markets, that are going to be revolutionary, you don't look at the price. As a matter of fact, it was a venture deal. It didn't go public for a decade. There was no price. So when you're looking at technology investments like that, you're looking at two things. Not the price. You're looking at two things. One, you're looking at the growth of a network. If I was investing into Uber, Is the network growing? Are they adding cities? Are more people signing up to drive? Are more people using it? Those are the metrics that you're looking at. There was no price for Uber for a decade. Remember, if you guys can remember this time, I'm sure you can, imagine if Uber was mark to market every single day, a live price. Oh, we just moved into San Francisco. The price shoots up. Oh, New York City, they're banning it. Oh, the price goes down. Oh, Houston's gonna bring it on. The price goes up. Now Dallas bans it. The price goes down. Imagine if we had to see that happen in real time, but we didn't for a decade. So the thing you're looking at is the growth of the network, something called Metcalfe's law. The bigger the network gets, the more valuable it is. Anyone heard of that before, Metcalfe's law? If you're investing in technology, you should definitely know what that is. That basically means that if I have a cell phone and I'm the only one in the world with one, it's not worth much. I'm pretty old, not as old as everybody here, but I'm pretty old. When I first got my phone, my first phone, my mobile phone at the time, I didn't even carry it around anywhere because I had no one to call. No one I knew had a phone. I took it to the job site when I was looking at real estate projects, but like other than that, I left it at home. So when everybody has it, when the network grows, it compounds. You can see the number of nodes there. One node, there's 0 connections. With 100 nodes, there's 5,000 connections. With 10,000 nodes, there's like 4 trillion connections. You can see how exponentially it gets more valuable. Now, also, as a network grows, you have network effects. And this is a big piece that people are misunderstanding what network effects are. You can't copy network effects. I could go right now, probably by the end of the day, I could get a guy overseas to make a copy of Facebook for me. I could make my own Mark's book. I could have everybody's account ported over and make an exact copy of Facebook, Mark's book. But could I get the network to come over? Would everybody start using it? If I did that, would all you guys come and join it? No, you wouldn't. You wouldn't because there would be nobody else over there. So network effects are almost impossible to overcome. That's why you don't see new social media applications popping up. To try to get network effects is almost impossible. Michael Saylor wrote this book, The Mobile Wave. Michael Saylor, everybody know Michael Saylor? Of course you do. He's become one of my friends. I've been to his house twice for a barbecue. Let me just brag about that for a minute. But he wrote this book a long time ago. He's been prophetic for decades. And he said that once a company reaches over $100 billion, it's impossible to knock them out. Obviously, Bitcoin's way past $100 billion. We can see examples of this. I don't have a timer down here. Oh, the timer's up there. Got it. I got a lot of slides. So the thing is you can't copy a network. I can copy Facebook. I could make an exact copy of Wikipedia and put it up there, but no one's going to use it. So you hear like, oh, but I can just copy Bitcoin, can't I? Yeah, you certainly can. Sure. I can go copy Bitcoin right now. I can make Mark's coin. Doesn't mean anybody will use it. There's more to it. All right, now let's take a look at the growth of the network. This right here is a chart of the hash power. This is how many computers are processing transactions on the Bitcoin network. So you can see that it is growing tremendously. That's from 2019 to 2022. That big dip you see is where China in 2021 shut down 60% of the network. Shut it down overnight. The network didn't skip a beat. It was resilient. It kept going. Now, at the very bottom, you can't see there, but if you look closely, at the very bottom, you see a couple little ripples. There's like a little pink ripple you can kind of see. That's the hash power for Litecoin, Bitcoin Cash, Bitcoin SV. Those were copies. How much network effect have they gotten? None. You could take 1% of the Bitcoin hash power and attack all 3 of those chains and shut them down if you wanted to with just 1%. Nobody bothers because it's not worth anything. How else can we see the network effect? Well, this is the number of Bitcoin addresses over time. This is users on the system. How many people are taking on Bitcoin? Remember, the more people have it, the more useful it is. If I'm the only one in the world with Bitcoin, no one to trade with. If we all have it, now we have exponential connections. I showed you the chart graph. This is the growth of the addresses that have it broken down by wallet size, how many Bitcoin they have. But look at that growth from 2014 to 2020. Parabolic, I would call it. All right. Now we look at the growth of the network. The other way that we look at new technology, if you're a tech investor, if you're in Silicon Valley, you're looking at deals like Uber, you're looking at growth of the network because remember, those deals aren't mark to market every day. There's no price. So I'm measuring the growth of that by the growth in the network. I'm also looking at the development on the network. Uber, they're growing. There's more people signing up to drive. There's more people signing up to ride. They got more cities. But are they developing on it? Oh, now they have Uber Eats. Oh, that's pretty cool. Oh, right, and they start adding on all these extra services. They're developing the network. So that's another way that we look at a tech investment. So is Bitcoin, is it growing? Is there development on the network? Well, with stacks, I'm not going to get super deep into this. Each one of these could be its own presentation. But now there's stacks, layer 2, layer 3. At Consensus 2 weeks ago in Austin, they announced layer 5, Jack Dorsey. Jack Dorsey is the founder of Twitter. He's the founder of Square, the largest digital payment service there is, Cash App. I'm sure you guys have heard of that before. He left all of that. He stepped down from Twitter a few months ago. He said he wants to dedicate the rest of his life to working on Bitcoin. That's development on the network. You're taking mind share of some of the biggest names, the biggest investors in the world to work on it. He launched Layer 5. We have Caitlin Long, industry titan at Wall Street, is now spending her life building regulations for Bitcoin banks in Wyoming with the government. We have Fidelity, the largest asset manager in the United States that has been in Bitcoin for a long time. Every financial institution has come in. We see that, Goldman Sachs and Citibank and even JP Morgan after Jamie Dimon said he'd fire anybody. We have all types of hardware that's been built. So Bitcoin has all types of security devices, nodes, cold storage wallets, accumulation apps that are built just for Bitcoin. All that development's on Bitcoin. We have satellites now that run the Bitcoin database. Not Cardano, not Ethereum, not XYZ, Bitcoin. We have Visa cards, reward cards. That's development on the network. We can see the development mapped out here. So layer 2 is something called Lightning. Each one of these could be their own presentations. I'm going to go quick. Hopefully I'm going to spur your curiosity. You guys can write down some of these notes, and then on your own time, you can go research some of these things that you're a little bit more interested in, because I could go deep into every single one of these. By the way, at the end, I'm going to show you a link. You can download this whole slide deck if you want. So then you can go do your own research. Don't trust, verify. Go do your own research. So Lightning is a layer 2 application that allows us to send Bitcoin faster, cheaper, and more private than any other cryptocurrency out there. So of the other 20,000 that are trying to be better, they're faster, they're cheaper, they're more private because Bitcoin's too slow and too expensive, supposedly. So now we can send Bitcoin faster, cheaper, and more private than any other cryptocurrency. So what's the point of all those? Good question. And we can see how fast those channels are growing, the capacity. Now, I've been working with El Salvador. I've been down there buying coffee with Lightning. It works faster than a Visa card. All right. Just recently in the last month, US Shopify has announced that all merchants will be able to receive payments in Bitcoin, in dollars or Bitcoin, and a partnership with NCR, the world's largest point-of-sale system. They handle 1 of 6 merchants, 1 of 6, now can instantly accept Bitcoin over the Lightning rails. Pretty big. That's development on the network. 1 of 6 merchants. That's big. That's development on the network. And then there's something called S-curve analysis. If you want to measure how a new technology reaches adoption, you look at the time it takes to go from 0 to 10%. That amount of time is the time it would take to go from 10% to 90% adoption. So we saw Bitcoin reached about 10% adoption by 2019. And so using an S-curve analysis, which we would look at telephones or color TVs or washers and dryers, we can see that by 2019, it should reach 90% penetration or adoption. Something we call parabolic. Now, that's all great, Mark. So cool. So there's network growth. You showed me that. I believe you. And then there's development on the network. That's great. But who friggin' cares? It's like a road to nowhere. You're wasting a bunch of time building something nobody wants, right? Like in China, building cities with bridges and roads to nowhere. Is that the case? Is all this network effect, all this development for nothing? Is it all a scam? Is it all a joke? Or is it something different? Since you've stayed to the end, I know you like this video, which means you're probably gonna really like this video right here and this video right here.